The source is the reason for the profit every season. What's up, M.B.U. family? Grand rising to all my disciplined traders out there who are tired of guessing and finally ready to learn how to position with purpose. Today, we're breaking down something that every real trader needs to understand if they ever want to stop bleeding money and start stacking consistent wins. And that's Delta. Now listen, before we go any further, this is not financial advice. I'm not your financial advisor. Everything I share is for educational and entertainment purposes only. You've still got to do your own due diligence. But if you apply these principles with patience and discipline, I promise you, it'll completely change how you see your options trades forever. Let's start with the lower end, point 1 and point 2 delta. Now I'm going to spell that out so you hear it correctly. 0.1 and 0.2 delta. These are what I call high hope, low power contracts. They sound cheap, they look tempting, and they can definitely make you feel like you're in the game. But the truth is, these are the kind of contracts that burn beginners the fastest. Why? Because a point 1 or point 2 delta means your contract barely moves when the stock moves. You might be watching Tesla, Nvidia, or TSLL explode upward while your contract is just sitting there like it's stuck in the mud. You're screaming at your screen, wondering why nothing's happening, but it's the delta. A 0.1 or 0.2 delta option doesn't have the strength to keep up with the stock's movement. You're sitting in the bleachers watching the game while the higher delta players are on the field running plays and scoring. Now, I'm not saying these contracts have no purpose. They do. In my opinion, low delta contracts are only useful for day trading when you see a quick opportunity. Maybe your account balance is small. Maybe you can't afford a higher delta contract yet. In those situations, sure, take your shot, but know exactly what you're holding. If you ever enter a point 1 or point 2 delta contract, please hear me clearly. Do not hold it longer than 2 days. That's it. 2 trading days maximum. You're not married to this contract. This is a quick handshake, a fast in and out opportunity. If you take this kind of trade, make sure you give yourself at least a 1-week expiration. You always want to give your contract time to breathe, because even though it's cheap, theta decay will eat that thing alive if you let it sit too long. And when you're dealing with these low deltas, the most important thing you can do is stay disciplined. You must wait for the right setup. Wait for confirmation. Wait for your price zone. If you chase, you lose. It's that simple. So be patient. Let it come to you. If the chart isn't in your zone, if you don't see 3 solid confirming candles, do not click buy. Discipline and patience are what separate traders from gamblers. All right, now let's move up a level. Let's talk about point 3 to point 5 delta. That's 0.3 up to 0.5. This is the mid-range, not too weak, not too strong, and it's much better than a point 1 or point 2. You'll actually start to feel movement in your contract when the stock moves. You'll see your percentage gains rise a little faster, and you'll notice the chart's rhythm starts syncing with your position. Now understand, this delta range still isn't ideal for the long-term goal we have in M.B.U, which is point 7. But this middle zone is where a lot of swing traders live. It's comfortable, it's manageable, and if you have limited capital, it's a solid balance between affordability and effectiveness. Again, this is not financial advice, but in my opinion, these contracts work best when you give yourself 1 to 3 months until expiration. The more time, the better. You want breathing room. You want flexibility. You want to be able to pivot if the chart starts turning against you. When you trade within the 0.3 to 0.5 range, you're buying yourself time to be right. And that's one of the most underrated parts of options trading. Time gives peace. You don't have to panic with every pullback because you know your expiration isn't tomorrow. You can wait for your setup to come back into your zone and recover. So, think of these contracts like the middleweight fighters. Not too heavy, not too light, but capable of going the distance if you've done your analysis correctly. Now let's talk about the sweet spot, the heavy hitters. 0.6 to 0.7 delta. That's 0.6, 0.7, and above. This is where things start to get powerful. This is where every move in the stock starts working for you, not against you. When the stock moves $1, your contract starts moving 60 to 70 cents in your favor. That's leverage that feels alive. The closer you get to a point 0.7 delta, the higher your odds of success. The contract responds faster. It fights back harder against theta decay. And you'll notice your emotions calm down because the contract's behavior actually matches what's happening on the chart. A zero point 0.6 to zero point 0.7 delta is what I personally use for everything: swings, leaps, even day trades. That's right, you can use high delta contracts across every strategy if you manage your entry properly. They're more expensive, but they're also more stable. See, low delta is like trying to fight the market with a pool noodle. High delta is like swinging a sword. Every move counts. This is the level where your skill starts to translate into consistent profits. You're not just hoping anymore, you're executing. You're waiting for confirmation, you're buying in your zone, and you're letting the math work in your favor. The goal, the M.B.U goal, is a zero point 0.7 delta. Say it out loud with me. 0.7 delta. That's our aim. The closer you get to 0.7, the more your trades start to make sense, the more your patience pays off, the more your peace returns. Because when you understand delta, you stop panicking, you start positioning. Now here's the truth. Most traders never even learn this. They just buy whatever looks cheap on Robinhood or Webull, hold it too long, and blame the market when they lose. But the real problem wasn't the market, it was the delta. You see, delta tells you the likelihood of your contract finishing in the money. It's not magic, it's math. And when you respect the math, the market starts to respect you back. If you want to build peace, discipline, and confidence in your trading, then start focusing on your delta before you ever click buy. Ask yourself, what's my delta? How much time do I have until expiration? Am I being patient enough to let it come to my zone? Because those three questions alone can save you from hundreds of unnecessary losses. Now, family, if this short video already has your mind blown, if something just clicked and you're sitting there like, wait, so that's why my contracts weren't moving, then you owe it to yourself to go watch the full breakdown. That's where we go deep into every level, show you examples, charts, setups, and exactly how to use delta to time your trades with precision. Click the full video link down below. Watch it all the way through. It'll make you more confident, more disciplined, and more profitable, period. And while you're there, like, subscribe, and join the family. Because M.B.U isn't just about trading, it's about transformation. We teach you how to master the market in your mindset. You're one click away from clarity, one video away from confidence. Don't scroll past the information that can change your entire approach to the market. Click the full video below. Watch, learn, apply, and remember, the source is the reason for the profit every season. Stop here. Say nothing else.